This is Mark from tradingform.com, and in this video I will show you how you as a trader can profit from the latest volatile market conditions. On the chart at the moment I have the S&P 500, and we can see the damage that has been done in just a couple of weeks by the coronavirus. We can see a peak to trough fall here of almost 20% before a small recovery. Prior to this, just a few weeks ago, the market had been in a bullish, calm conditions that had prevailed for about 6 months. So many traders have been wrong-footed by this. The key that we need to understand, first of all, is that market conditions have changed. They may well go back to bullish conditions, but that is not what we are seeing at the moment. We are seeing high volatility. If not bearish, then certainly we're in a strong correction at the moment with a potential to go into a bearish market condition. If we scroll the chart out a bit further, you can see we're in a similar correctional situation to what we were in 2018, in 2015, 16, back in 2011. We are not yet in the condition we were in 2008, 2009, or going back even further to the dot-com bust. So we know that the current conditions are something like what we saw in 2018, 2015, 2016, 2011, and maybe not yet what we saw in 2008, 2009. So how can we take advantage of this information without knowing what is going to happen in the future? Well, what I've got on the screen at the moment is my multi-strategy model. Now, this is a model that is set up to trade in slightly different ways in different market conditions. It's called a multi-strategy model because there are 4 different strategies preloaded into this model. So we've got the S&P 500 as our background historical data. This is our reference data. Let's have a look at the strategies that I programmed into the model. Firstly, long strategy number 1, short EMA is greater than the long EMA. I have used 20 over 200. I normally use 50 over 200, but I wanted to make it a little bit more responsive. Low volatility. This is another condition that we often see in bull markets, and it's often the sort of conditions where we want to trade long, and we're going to enter on a retracement. Retracement that I like to use is, in this case, it's 2 consecutive lower closes, and we're going to trade long. Now, long strategy number 2. This is a mean reversion strategy using a short period RSI. Either a 4 or a 2 period RSI can be used here, and we're going to get a rise above the oversold level. Again, we're using short EMA greater than long EMA to identify the dominant market conditions. Now let's look at the short strategies. Now the first thing to note is that I wanted short strategies that can work in a wide variety of situations. These are not short selling momentum strategies which will only work when we've got in a crazy bear market, which is not the situation at the moment, but it may develop. These are the sort of strategies that are quite conservative and will work in a wide range of conditions. So short strategy number 1, price is within a standard deviation channel band, and in this case it is greater than the linear regression, 200 period linear regression. And then we have a long Marubozu candle. Now this, if you're not familiar with these type of candles, is a full bar candle or close to it, where we have an open and we have a strong high. Now short strategy number 2, we have the stochastic oscillator, and it's greater than 50. So we already have at least somewhat overbought conditions. Then we have 2 consecutive higher closes setting us up, and then we have high volatility. So this is the reverse of the low volatility bullish conditions. We have high volatility. So if I focus in here on the results page of the model, we can see we've got lots of different variables because we have 4 different strategies. We have our usual variables that you get in a Trading Form backtest model, And we have our different scenarios which we can switch on and off in order to test the different strategies. If you'd like more information about this backtest model and other TradingForm backtest models, there is a link on the screen and below this video, so click on that to learn more. Trading is easy as long as we remember the rule to always trade long in a bull market and short in a bear market. However, it is not always easy to identify what market we are currently in. At the moment, as we saw at the start of this video, we're in a correction. Maybe not a full bear market, but closer to that than the bull market. So let's have a look at some similar market conditions. So before we can decide how to trade the current markets, we need to have data about what has happened previously. So I'm going to have a look at these 3 periods that I've identified as significant market corrections that have taken place in the last 10 years. So on the screen now you can see long and short trades taken from all 4 trading strategies over this time period, over the most extreme when prices have been falling and when we've had volatility. Now if I show you in detail, we can look at the long and the short trades. We can see it's pretty clear here. The short trades, and this may be massively obvious, but it's demonstrating something that is true, and it's not always obvious or easy to do at the time, that it's short trades that have been taken with a proper strategy that have performed the best. Now let's have a look at the 2 significant bear markets, the 2 extensive multi-year bear markets that took place, the dot-com crash and the financial crisis crash. We can see the results on the screen, and you can see there's not even any long trades. All the trades here are short trades, and the reason for this is the conditions are not met for long trades. In this video, I have identified 4 different trading strategies that can be used in a wide range of different market conditions, and I have focused in on the 5 periods that are most similar to what we are experiencing at the moment with the coronavirus panic. So we need to be aware that most of the time markets are in a bullish conditions and it is better to go long. But when we're in these volatile periods, we need to have a solid, reliable short trading strategy that is going to allow us to take advantage of these type of markets. Now, the best advice I can give you is to get your own data. Study the markets that you are looking at and use a model, something like the model that I have shown here, the multi-strategy model, to do your own analysis, come up with your own conclusions, and then stick to your trading strategy. Now, I hope you found this video useful. If you'd like more information on backtesting and trading the financial markets, please subscribe to this channel, hit the like button, and go to tradinformed.com.